Hey guys, so I thought I'd jump on here because I'm going to get ahead of the inevitable headlines that you're going to see come September. And you're going to hear some terms come up that maybe you've never heard before. And so I thought I'd get ahead of these articles to kind of give you the good and the bad about these things so that you can make decisions for yourself on your mortgages, because this is important. So first, let's talk about the bad. So come September, there's going to be another interest rate hike, probably 50 to 75 basis points. Okay, and that's on variable mortgages, of course. So because of previous rate hikes and the fact that most people have static variable rate mortgages, this could trigger, and that's a word you're going to hear a lot of, trigger payment increases, which is going to be for most people, the first time they're going to have to actually increase their payments. Right now, most banks, not all, but most, have kept payments static throughout these rate hikes. So what you're seeing is, instead of, if you have a $1,000 a month mortgage, that would be nice, and $500 of it used to go to principal, now because of these rate hikes, $100 a month is going to principal, and the rest are going to interest rates, or interest costs. So that's a problem, because on the next hike in September, you may have to pay more because you're not paying enough principal, or in some cases, any principal off. So that's going to wake up a lot of people, and it's going to worry a lot of people. And so I did a poll recently about how many people haven't even looked at their statements since interest rates have increased, and almost 50% haven't looked at their statement. Now, this is an unofficial poll, obviously. It's not a good cross-section of Canadians, but I think a lot of people will be in that boat. And there's potentially more hikes coming by the end of the year. So what will this all mean? It'll mean people have to pay more. It probably will mean some panicked people, maybe some fear-based decision making, which could mean selling their home, selling their rental home, or going into a fixed mortgage. So this is going to come into play in the next 3 weeks, especially when they raise rates at the beginning of September. So this is the bad, and that is scary, and it's going to affect a lot of people, probably most people that I'm talking to, in one way or the other. So, but here's the reality that I want to keep in mind. First, you should definitely talk to your mortgage advisor about what this means for you. It's not a blanket, it's going to cost people the same across the board, or it's a huge worry for everybody across the board. So talk to your mortgage advisor about what this means for you. I just scheduled a call yesterday, had a good 30-45 minute call, and I would recommend you do the same. They predict this hike will mean for the average Canadian, they have to pay about $200 a month more because of this hike. That's not a crazy amount, and something that most people can stomach. Of course, in Vancouver, our mortgages are a little bit higher, so perhaps they will be a little bit higher than $200 a month, but not something that I think is going to cause people to mass sell and panic. Most analysts, like I said, are predicting another hike after this, but they also predict steady rates in 2023. And I can tell you, myself and my colleagues still have many more buyers on the sidelines right now than sellers. And so once the bank gives us the okay that rates are going to be stable, I think you're going to see those fear-based or worried people, I should say, enter back into the market and steady things. Third thing, inflation is starting to come down. That is the key driver of these interest rates going up. So now that inflation is coming down, I think that will help the banks steady the rates, especially for 2023. And number 4, the underlying fundamentals of real estate in British Columbia still are the same. Immigration and demand to be in Canada, and more specifically Vancouver. Money is still relatively cheap. Rents are high and even going much, much higher. And we have a glut of inventory on the market, and it's costly, difficult, and time-consuming to build. So there will be short-term pain as we have to adjust our monthly expenditures, look at our mortgage, maybe put more towards the mortgage. But I don't want to see people panic and lock in rates based on fear that maybe they don't need to do. So just adjust your household spending in the meantime, talk to your mortgage broker. And if you have any other questions, feel free to use me as well. Have a great day, everybody.